I want to see Web3 win. Like, I want to see the biggest companies in the world come out of using this technology and using NFTs. And if we hamstring or kneecap the ability for organizations to do that by like ripping out their source of revenue, I'm not quite sure we're going to evolve as an industry in the ways that we hope we are.
Hello and welcome to another episode of ZenChats. Today, my guest needs very little introduction, but I'm going to give one anyway. I'm thrilled to be here with Derek Edws, who is managing partner at Collab+Currency, a crypto-focused venture fund. You're not going to believe this biography. He's an advisor to Proof, a member of the ArtBlocks Curation board, founding member of Flamingo DAO, one of the most well-known, arguably the most prestigious collector DAO in existence. And I mean, I could go on and on, but those are some of the main things you've done and are working on. Like a lot of the projects you've invested in are massive. Welcome. It's a privilege to be chatting with you. Thank you for being here. How are you?
Wow. I'm doing well. I appreciate that, Zeneca. It's actually a privilege for me to be here. I've been watching your journey over the last year and excited to chat all things Web3 and NFTs with you. And you've done an amazing job building a great brand and audience around yourself and your thoughtful content. So it's actually, the pleasure's all mine. I'm excited to be on the show.
Well, I appreciate that. There's so much to get into. So, I mean, honestly, it's hard to know where to start. I think let's start with Collab+Currency. I think it would be helpful if you could give a bit of context about what that is, and maybe even like take a step back, like your journey pre-crypto and NFTs, and how did you get here, and what led to Collab+Currency, and then we'll take it from there.
Yeah, so I went to business school and law school. I built a consumer products company with a few of my business school classmates. I worked on a bunch of startups. This was between 2010 and 2017. I would say around 2017, I got really interested in this intersection of regulated assets and blockchains. So this was like the security token industry. What we were seeing at that point were projects that were raising capital, and what they were raising for were network tokens, but they were implicating securities laws while they were doing like the fundraising process. And so my legal brain was like, there's got to be a more regular way to do this. And so I got really interested and started writing around that intersection of regulated assets and blockchains. I took over a think tank there for a couple of years that was focused on that intersection. I was advising projects in Los Angeles and New York around that industry. And then I would say in 2019, my partner now, Steve, him and I have worked on like 4 different projects together. He was actually his first year of being a business school finance professor was my 3rd year going through business school and law school. And so we were roughly the same age. There was a bunch of us that became very close. A couple of startup projects ended up getting started out of that friendship. So I worked on a startup project that he founded. He advised the project that I worked on. We ended up publishing academia together and have worked very closely just over the last decade. He had started to work for a fund called Collaborative Fund, which is a traditional venture shop based in San Francisco, New York. Sharing economy thesis. They had invested in things like Reddit and Quora and Lyft and things like this. He was brought in to start helping them think about crypto. And so I started helping out as well. Eventually, we spun that vehicle out. We were the 2 partners. We called it CollabCurrency. And that's how we got off and running. We're on our 3rd fund now. And I would say first fund was very general Web3 blockchain stuff. We were investors in some of like the big L1 projects. We invested in DeFi. We invested in picks and shovels, things like Ethereum and Bitcoin and Solana and Avalanche and Chia, DeFi protocols. I think we were very early to DeFi, him being a finance professor, me being a trained attorney. We just kind of understood what was going on with this disintermediation of like financial functions and using blockchains to do that. So we invested in a bunch of DeFi protocols in 2019, 2020. I would say the big unlock for the fund and for me in particular, having done consumer for a while, was a project called Super Rare. And so this was early 2020. Super Rare was raising their seed round. We got to know John Crane, who's the CEO of that project, Super Rare John. And we just dug in and became very clear. And I wrote a piece about this called You're Sleeping on Crypto Art later that year, that you could actually, using trust minimized ledgers and the ERC 721 to kind of connote scarcity around digital objects, you could replicate the functions of the contemporary art market on chain. and just what Super Rare was doing for one-of-one crypto art. And once you got past that mental hurdle of like, is this technically possible? The question then became, well, do people actually want to buy this stuff? And it became clear digging in that people definitely wanted to buy this stuff. I wanted to buy this stuff. And we were kind of off to the races. And so ended up investing, I think, in close to 40 or 50 NFT projects over the last few years. We led the seed round for ArtBlocks, investors in Quantum, Axie Infinity, a number of gaming, collectibles, marketplaces, social products, all kind of leveraging NFTs and Web3. And so that's CollabCurrency, and that's kind of how I found my way into this crazy industry.
That's just an incredible backstory, and you've got your fingers in like pies for everything. It seems like, from DeFi to all these NFT projects and protocols. You mentioned ArtBlocks, and I think that's a really good segue into. I mean, obviously, anyone who knows me knows I'm an enormous ArtBlocks fan. I love the ArtBlocks. I'm in Block Talk all the time. You are too, actually. So yesterday, ArtBlocks announced publicly, they announced their curation board. And they had this Medium article where they went through, I don't know if it was like 10, 15-ish people on the curation board. You can probably tell us exactly. And one thing I really enjoyed and I noticed, I went down the list and people had like a photograph of them. Some people had a PFP. You just had a squiggle.
Yes.
Your PFP of choice was a squiggle, which I absolutely loved. But we were chatting off air. You've been part of the curation board for a while. So I'd love to know, just more about like that process and your involvement with ArtBlocks as a whole.
Yeah, so I think your audience is probably aware just because you've ArtBlocks pilled them so many times. But just to give the quick recap, what ArtBlocks is it's kind of a vertical marketplace for a very specific type of art, which is generative art and on-chain generative art. And so it's this marriage of taking this Web3 architecture and pairing it with this art form that has existed since the 50s and 60s. And by injecting code and automation and these trust minimized ledgers into that process, you're actually you're able to further a career that was like a career of artists who were found it very difficult to monetize historically over the last 50, 60 years. So that's ArtBlocks. It's a generative art marketplace. The other thing I'll note, just to get to your question, Zeneca, is they've always understood that there's a role for curation when it comes to this idea of unlocking great artwork. And I think we also have this view at the fund. Like when we think about why Super Rare, it's become kind of this Schelling point. It's very Lindy for one-of-one crypto art and one-of-one crypto artists. So to give an example, when new entrants come into the space, the idea is that many of them are looking for signal when like it's just very noisy. You can deploy work yourself on OpenSea. You can maybe launch editions on Nifty Gateway. You can, post an asset on Rarible, or there's many different ways to leverage the tools of Web3. And I think what stood out to us when we think about like investing in vertical marketplaces is, Super Rare, for example, has become a brand name for one-of-one crypto art. And so when you're looking for the best one-of-one crypto art in the space, you go to Super Rare. And for the same reason, that was interesting for us for ArtBlocks. It was clear early on that they were taking a very heavy hands. They were opening up the aperture for anyone to like participate and create generative art and launch through some of like the playground and factory verticals. But the main driver of a lot of the interest on that platform was coming from this curated section. And the curated section being many artists would apply, and the curated board would then decide, we think that this specific work, this specific algorithm is pushing the industry forward in very specific ways, and this deserves to stand on its own as a piece that can launch on the ArtBlocks curated vertical. And so that approach, we've seen that approach around curation get unlocked across the space, whether it's music or art or collectibles. And we thought it was very elegant for something like generative art. And so that I would say like that model has persisted and seems to kind of be proliferating. But to get to your actual question around curation and my role in the curation board, I knew when I was asked that I wanted to be part of that process of finding and sourcing and working with really talented artists around the globe who may not have had an access to sell their work in the past, but now had this forum by which they could level up very quickly. I mean, if there's something I love about Web3 is like this is a very meritocratic technology. It's like you can be in some remote village somewhere halfway across the world, have access to a computer, and all of a sudden find a global audience willing to pay for your work or follow you as an artist and follow your journey and support you if you're good enough. And so there's something really interesting to me about this idea of curation and being a part of the curation board and helping find and resource and dig up some of like the most talented work that's pushing this space forward in very concrete ways. So I went off on a bit of a tangent there, but that's how I think about curation and the curation board at ArtBlocks.
It actually brings up another question. Because of your involvement with Super Rare early on, when you became aware of ArtBlocks and you know, because you helped lead that early round, did you was the idea of curation something that Snowfro Eric already knew of, or is that something that maybe you said, hey, what about curation? Was that a joint thing, or did he have that vision already?
Oh man, I cannot take credit for that. So I wish I could, but so a lot of people don't know this about Eric, but he is not just like one of the nicest human beings on planet Earth. Like, you spend 30 seconds with the guy and you're like, you must be protected. You're a national treasure. We have to do everything we can to like protect you from everything. But also he's just like brilliant in his vision. And so even in my earliest conversations with him, it was clear he had such a deep and nuanced understanding of what ArtBlocks could be. And it was around, I think a lot of it was around his understanding of art just broadly. I mean, he is an art lover. He is an art maker. He is an art creator. And more specifically, he had been following and understanding the threads around generative art for a very long time. I wrote this piece called Punks, Squiggles, and the Future of Generative Media. This was in like spring of 2021. And it was basically to kind of like explain ArtBlocks and like where it sat in this lineage of generative art. And when I was writing that piece, he put me in touch with a bunch of really great and sharp people. Dmitry Cherniak weighed in. There's a number of other great artists that weighed in and like how I should be thinking about putting this piece together. But the first part of that piece was really tracing the line back from the 50s and 60s. And this was maybe 3 or 4 months after ArtBlocks had launched. And when I was talking with Eric about how to actually structure that part, he knew all of the names of the people who had built the generative art industry starting from 60 years ago. And he's like, you need to research Molnar. You need to research this artist. You need to research this artist. And this is how the line has been created up through when artists like Dmitry Cherniak had started to create work on Instagram and started to share it and build followings around generative art and these algorithms and the subculture of generative art that was getting created on social media and web too. He just had this very deep and nuanced understanding of where work was coming from, how it was being created, what elements were being pulled from where, and why things looked the way they did. And in talking with him, it was clear that he knew very clearly the confidence level that he had and what ArtBlocks could look like, even that early on in the product, was so inspiring and so cleanly thoughtful that it took everything not to just like give him as much money as I possibly could, because like I knew this person was just so in sync with what was about to happen.
Yeah, I mean, wow, I could listen to you talk about ArtBlocks, the history, generative art forever. I have one more ArtBlocks question, and then we'll move on.
Yeah.
As much as I want to keep talking about ArtBlocks.
Same, likewise.
It's digging into the curation process a little bit more, and I don't know how much you can share, but I'd love to like try and peel back that curtain a bit and get into, so how does that actually work? Is it, A, how many people are on the curation board, and B, is it something where everyone has to vote or a certain number of votes have to be achieved for something to pass? Yeah, just curious on that process, whatever you can share.
Yeah, so I believe there's close to 15 to 20 folks on the curation board, and they span, I think the diversity that has been put together around the curation board is probably its greatest strength. I'm not classically trained or formally trained as an artist or an art critic. I am a pretty big collector, and I have thought very deeply about generative art. And I have thought very deeply about crypto art and what it means to build on top of others' work. And I understand how, art is typically art, and any like temporal art is a response to the art that came before it, and also a response to what's happening around our culture at any given moment. And so, but I would say that's not why I was brought on the curation board. I was brought on the curation board because I have this other lens, which is maybe a little bit more orthogonal or different around finance and culture and consumer, and understanding the trajectory of work in a completely different light than someone who, like Casey Reese, who created processing and has been teaching about generative art for a very long time. or some of the other amazing curators that are on that board. And so I think to get to the first point, which is just like, what is the curation board? It's basically a mix of many different skill sets, many different brains, many different ideas, genders, academic backgrounds, professional skill sets, training, and everyone is coming together and using a very it's amorphous but also very specific and concrete guideline to evaluating work. And sometimes that leads to a process where we find a really great artist who's pushing the industry forward in a very specific way, but it's just not quite right yet. Like maybe the algo needs to be tweaked, or maybe it needs to be some element needs to be played with or expanded upon, or maybe the collection size isn't quite doing what it's trying to do, what the artist is trying to do at the size it's asking. And so we do have a rubric that we've kind of crowdsourced internally to kind of help guide us that process and help guide the conversation around how we think about the work. And so work comes in, we think very deeply about it. We kind of work internally on our own with it. Others do the same. We come together sometimes and we talk about it. And then often what will happen is that artists will get a ton of feedback, regardless of if they move forward in the curation process or not. They'll get a ton of feedback, and they will either exit the curation flow or they will continue to persist through the curation flow until it gets to a point where that work may be deemed to be part of the curation collection, or that artist has now a ton of feedback and a ton of insight on how they can improve the collection for resubmission, or maybe take it elsewhere, either on ArtBlocks or directly on their own, to kind of further the goals of that project that they've set out for themselves. And so it's a mix. I would say if I had to like call out the ingredients, it's a mix of really differentiated viewpoints, structured rubric, like some amorphous kind of conversation and thinking around how these things can improve, all mixed together with just, different insights and public conversation within the board itself to kind of help tease out and source the best work to launch on ArtBlocks Curated.
Yeah, I mean, that's fascinating. It's clear how much thought is put into the process and the decisions and the people. Like putting that diverse board together is no easy feat. And when I read that announcement yesterday, I was like just nodding my head going, oh yeah, this is really great.
It's cool,
really
man.
Happy. Yeah.
And the really awesome thing is that, I would say the participation level of the board, none of us are compensated. I mean, like this is like, it's almost like a responsibility that we feel like it's like I wrote this, but like I am grateful and honored to even be a part of it and to take time out of my week to actually think about these projects, and to see great work, and to like, it's inspiring. I'm grateful. It's an honor. And it's like why I put time into it, because it's meaningful for me to be a part of it. And I suspect for many of the other curators as well.
Yeah, I can totally imagine that. All right, I'd like to shift gears a little bit and move to Flamingo DAO, because this is something that fascinates me and I think a lot of other people, but there's a bit of mystery around it. I think there's not necessarily as much public information and it's not spoken about as much. Maybe if you could explain what Flamingo is and how it was created, because you were there since pretty early on.
Yeah. So I can't talk about Flamingo without talking about a group called Tribute. And so Tribute is the backbone of what I would consider to be the most successful investment DAOs in the world. It actually came out of a project. So it's Aaron Wright and Priyanka Desai. Those are the two people that are like most well known that are part of the Tribute network. But it came out of a project called Open Law that I was very obsessed with when I was getting into this space back in 2017 around this intersection of regulated assets and blockchains. Aaron was a professor of law at Cardozo. He was also thinking very deeply of like, how do we actually take this regulated infrastructure that exists over the, especially around securities since 1933 and 1934 Securities Act, and start taking this technology and trying to like contort it in a way that makes sense with where we're going as an industry. And so Open Law was one of the earliest experiments of trying to, tap into this idea of smart contracts accenting like the legal layer. And what ended up happening was they created an investment DAO, completely regulated. I think it was a Wyoming LLC wrapped DAO. And it was called the LAO. And the LAO, their mandate, it was just a bunch of random people all across the world that came together, pulled money together, and invested in projects. And these could be DeFi projects, they could be equity projects. And that has become, a very important and large investment DAO. But what happened was a question ended up arising inside of the DAO, which was, hey, there's these weird things called NFTs. Do we want to buy this stuff? And that was a very contentious decision. Like, there was people that were like, this makes no sense. These things are going to zero. These are just pictures. Or these are just JPEGs on the blockchain. Other people were like, no, there's something transformative here. We're not exactly sure what's going on. And so it ended up happening where a group split out of the DAO and started Flamingo. And it was, I would say it took about 4 or 5 months for the DAO actually to come together. I was one of the first members of Flamingo. My business partner, Steve, was one of the first members of Flamingo. A number of other people who I now consider to be my closest friends in the space were part of that early tranche. But at the early stages, there was only maybe about 10 or 15 of us that were in there. And this was, I would say, mid 2020, that were in there just kicking ideas around, helping like refine thesis, like sharing why this was interesting, why this wasn't interesting. And that was kind of like how Flamingo got started. And it was open for anyone to enter for months. I mean, I think up until the end of the year, where anyone could just walk in, deposit the minimum subscription, which I think was like $30,000 at the time, maybe even a little bit less. And you could be a part of this amazing collective. And it ended up subscribing. We ended up making some really important moves in that first 6 months. And then after that first 6 months, that have kind of like taken us to the next level in terms of brand. But I would say it had very humble beginnings, which was it's fun to think back on.
Yeah, that's really interesting to hear. Back in, like, there was this really successful investment DAO, the DAO, and even within there were NFT skeptics. And then, It just goes to show how early things were. I mean, you said Flamingo was, early 2020. That was very early, before I even knew what an NFT was, for sure. I'd be curious to know, and I don't know how much you can share or are comfortable sharing, but like I'm really fascinated by these investment clubs and DAOs, and like within one of my communities, 333 Club, there's a group of people that have come together to form like this Prism squad to like invest money together, and
Prism's an awesome product.
It's a great product, and a lot of the questions that I'm sure you went through, that people are going through, are like, how do you approach selling? Is there a price target? Do you buy with an intent to hold for 1 year, 3 years, 5 years? Or do you just buy to collect and then sell in the later? Just maybe on that. Do you have a framework?
Yeah. So this is going to be shocking, I think, to most people, but Flamingo has never actually sold an NFT before.
Actually, that's not shocking to me. I believe it.
We've never sold a single NFT, and there's a few reasons for that. I would say, most importantly, we recognize that we're not going to get it right every time. Like we are a collective of brains that have come together to like try and grok and understand this special thing that's happening around NFTs. But the truth is, like, we can't tell you with like specificity that we need to exit our CryptoPunk position at 5 ETH, because like we don't know if it's actually going to 10 ETH or 15 ETH or 60 ETH or 100 ETH. What we do know is that, or what we do have conviction on, and I say that in like the short to medium term, what we do have conviction on is that a number of these assets, many of which we are investing in, are going to be globally recognized and very important assets, both as collateral, but then also as culturally and historically significant works, whether that's art or it's collectibles or some hybrid or membership passes or whatever it may be. And we know that just with power law returns and how the world shakes out around investable asset classes, a number of the things that we invest in are going to go 100x, 500x, 1000x. And so we don't put on like the trading mindset when we think about taking positions. We think about finding really great projects that we think are doing something special, whether it's something around art creatively or something technically that's interesting or something that we think is culturally or historically going to be important. And we get conviction and we just move in. And then we run that playbook over and over and over again. But I would say in terms of monetizing, we've never actually monetized a single asset, which to our benefit, right? Because a number of the things that we've invested in that many people sold earlier along the way have now 50x or 100x or 500x or 1000x. And we've done quite well just by virtue of holding for a long term and holding for the long term and having a much longer time horizon by which we think about this asset class.
Yeah, I mean, that's an amazing answer for how do you approach selling? We never sell. All right, flipping it then, I'd be curious to know, how do you approach purchase opportunities? So is this something where a vote is put up and 50%, 80%, 30% of people have to approve a transaction? How does that sort of process work?
Yeah, so there's a couple of methods that we use. There's typically everything has to go through an on-chain vote. And that means there needs to reach quorum around so somebody can throw up a proposal, people will vote on-chain, and then the DAO will allocate a specific amount of spend to execute on whatever that transaction is, whether it's a specific NFT or an investment in a project, or something that's more of a hybrid. So everything has to go through on-chain vote. Now, there has been ways that we've sped up that process by passing on-chain votes that maybe give specific members the ability to spend up to a certain threshold, or for the group to use Discord emojis, like we call it emoji consensus, to be able to move quickly on opportunities that we've all come together quickly and like deemed through emojis to be able to execute on up to certain thresholds, right? So like there has been ways we've been able to like mitigate some of like the speed and that is sometimes required around opportunities. Like Zeneca, you've been in the space long enough to know that sometimes the best opportunities are going to be closed out in 30 minutes. And so like there needs to be there's some time sensitivity there. And so the way that we've mitigated that over time is by creating these pockets of opportunity for both individuals and for the DAO itself to be able to move quickly. But typically everything that gets decided upon needs to go through an on-chain vote. That on-chain vote has to reach quorum and before funds can be allocated.
And can you share what the quorum percentage is or the threshold?
Yeah, it's a little tricky and I can't totally describe what it looks like, but it is it's a good significant, I can't actually say that publicly.
Fair enough. Yeah. Something I forgot to mention as well before that maybe would help frame context is it's capped at 99 members. So this is not some 1,000-person DAO. It's for legal reasons, and maybe we can touch on that. And obviously, well, I was going to say you're not a lawyer. You actually are a lawyer, but you're not going to be speaking.
I am a lawyer. I'm not a practicing lawyer.
Yeah.
I'm not going to be as helpful on the legal side these days.
But in terms of like the legal and or tax implications of setting up one of these investment funds, what are perhaps some of the things people should be thinking about? Because, Prism is out there and people are, putting money together, throwing together and going and doing things without necessarily thinking through some of the legal issues. And what are some things people should probably be thinking about? Yeah.
So what I can say is some of this has to do with like, I can't tell you exactly what Prism is doing on the back end. I do know that they have counsel that they work with, and I'm not an investor, but I've looked into that product a bit, and it's I know that they've thought deeply about like the regulatory side of what this looks like and are trying to do things by the book. And so I would just dig in with that team to figure out exactly what the best solution is for anyone that's trying to set up one of these Prism vehicles. I can say for the tribute stuff is that everything is regulated much like any entity is regulated in the US. It's typically an LLC. There's, an operating agreement. There are members that pay taxes against the proceeds of that LLC. And so it is kind of boring in its simplicity. It's just a regular entity, and it just happens to have some of that operating agreement indicates that there's like a way for code to replicate some of what typically is enforced just by the legal layer. And so that includes managing votes, that includes treasury management, that includes allocation, distributions. Some of that has now been accented by the fact that we now have smart contracts and code by which we can speed up and make more efficient the process of the legal layer.
Okay, yeah, no, I mean that makes a lot of sense, and I think that basically at the end of the day, you just need to talk to lawyers, get your own advice for your own situation.
100%.
And again, like so a lot of this was US centric. There's people around the world, different jurisdictions, and different things that apply. So, all right, moving on from Flamingo now. I'd love to just just, I guess, pick your brain about some stuff happening in the space at the moment, specifically this whole creator royalty debate. Like that's topic of the week, I guess, or maybe like of 4 days ago. Last week it was CC0, then it was, which we can maybe get into. But yeah, what are your thoughts on this, on SudoSwap and the fact that on-chain royalties are not royalties are not enforceable on-chain, and this whole debate that's raging right now?
Yeah, so maybe you can help paint the best argument on both sides, because I would love maybe to refine my own thinking on this and then comment on like how I net out. I am familiar with Sudo. I'm LPing a bit. I'm testing out the product, just like I'm following that product development very closely. I've also thought very deeply about creator royalties and a lot of the business models that are created in Web3 for creators to be able to create work persistently. But I'd be curious to hear, like, on the strength of the merits, Zeneca, like what would you consider to be like the best argument in favor and against that you've seen so far in the last week?
Yeah, that's a good question. So in favor of creator royalties, I think that, and I think we need to differentiate between an individual artist creating one-of-one art or a generative art collection versus a business entity that is launching 10K collection or several 10K collections and has an entire team working on it and is using the revenue at the royalties as business revenue. Yeah, so it's a slippery slope where you make that delineation, but it is important. I think that one of the best parts about the NFT space is, or like one of the biggest selling points and things that attracted a lot of artists in the first place and still does, is this idea of you can get perpetual royalties because, in the traditional pre-NFT art world, an artist could create a piece of art, sell it for $200, and then, live a life of poverty, and 50 years later it sells for $10 million and they get none of that. And, or they've passed away and their descendants get none of that. And, the idea of being able to create something and then capture the upside, if that piece of work generates a tremendous amount of value, is appealing, obviously, to artists. And I think it makes a lot of sense. Obviously, on that really long time horizon is one thing, but on a much shorter time horizon as well, I think it unlocks this new way for artists to support themselves and be able to have the freedom to create more work, knowing that as long as their art is desirable and people are wanting to collect it and trade it to a certain extent, they will be able to generate a certain amount of revenue off that and hopefully spend more of their time focusing on creating art and not, working 3 jobs to pay the bills. And obviously you could say, well, without royalties, they could just create more art and release that and sell that. And that's one argument in that direction. But I just think that philosophically, it makes a ton of sense. And I know even pre-NFTs, certain countries around the world implemented laws. Like I was looking this up, Australia in 2009, I think, came up with a law that said if any artwork is sold over $1,000, the original artist is owed 5% of that. And obviously enforceability and logistics get more difficult, and that's where NFTs make it beneficial. But clearly there's a desire in the art community and collector community as well, I think, to want to support artists. And so I think there's a really strong desire for that machine to keep turning that way and for artists to be supported and to be able to be rewarded. That's a pro argument from that perspective. From a business perspective, I think it gets a lot trickier. I think obviously businesses, let's say a 10K PFP project that is trying to create utility, deliver perks and membership benefits to their holders. You think about what are the revenue models. You do an initial mint and you raise an up, usually, putting free mints and stuff to the side. You'll raise an amount of initial capital, which will be able to, maybe kickstart the company, maybe you hire a few people, maybe you execute on a few items you've promised and deliver on your roadmap and say, oh, we're going to do these things. But at a certain point, that money is going to run out. Like it's not, unless you raise, infinite, like $1 billion and invest it, obviously, and live off that. But for most realistic projects, you raise $1 million, $5 million, even 10, 20, 30 million, eventually it's going to run out. And you need to think about ongoing revenue models. How are you going to sustain this business and be able to support the community over a longer time horizon? And I think historically, and by that I mean like 18 months or 12 to 18 months, a lot of projects have relied and depended on either secondary market royalties or releasing another collection, more NFTs, a secondary sale. Like Bored Apes did it. They launched Bored Apes, 0.08. Great, but that was like $150 per NFT, and the community, the floor price grew so high they could not deliver 50 ETH worth of value to someone buying on secondary. So then they released Mutants and raised a whole bunch of capital and went to VCs as well and raised that way. So there is an importance in finding a way for ongoing secondary market revenue for businesses. However, I'm not convinced that royalties are great there, and so this is like a for and against argument. For is like, yes, it's great for them to be able to capture some of the revenue when people are trading and going back and forth. And again, it gets blurry when, you know, what if an amazing artist created, in many cases they did, and the artist maybe deserves some royalties from that because they are an artist, they're a creator, their artwork is being traded. But I think what we see is incentives. The incentive alignment is a bit mismatched, where the project is incentivized financially for high volume trading. They don't care as much for price to go up, and they don't even care that much if price goes down in the short term, as long as, you know, there's high volume, they're getting more revenue in. Whereas the community, obviously buying into the project, they want price to go up, holders want price to go up, and it leads to, I think, just situations which are unethical or just unintentionally unethical, where projects are hyping things up, and they're incentivized to keep things mysterious and keep people speculating, because when people speculate, they trade and buy and sell, and then people are like, maybe they run out of liquidity, they have to sell, and then every single trade the project is making money. So the incentive alignments are just a bit off there. But then let's talk about some of the arguments for no royalties, and I struggle to think of too many great ones for like an individual artist. I think it just it doesn't seem to be a great thing. Obviously, if you're purely a person who doesn't care about supporting artists, if you're only thinking of financial interest, then no royalties is going to be better. It's just you can get the same asset for cheaper.
Yes.
If you're a collector, you usually you're somewhere in between, right? In between the black of no royalties to the white of full, like this spectrum. You're in the gray area. And usually most collectors of art are much more towards the end of wanting to pay their royalties and support the artists, and won't want to bypass those by going OTC. So yeah, again, I find it hard to think of really strong reasons, positive reasons why there shouldn't be royalties for individual artists. For projects though, when you have a 10K collection, it is at least today, a large percentage of the community are flippers. They're there to trade. They're there to make money. I think if most people are being honest, the 90% of people in this space are here to make money. Even if they're in a community that they love, many people would be like, yeah, if they get to a certain price, I'll sell. Or like, I'm buying in at this point, but if it gets to this point, I'll sell. And then maybe I'll look to buy back in at a cheaper price. And people are looking at these as trading assets. And so from that perspective, it makes sense for them to want to pay less royalties. It makes sense for a flipper who doesn't care about the longevity of the project to want to pay lower royalties. And I kind of see it as a bit of a race to zero, where because they're not enforceable on chain, there are potentially workarounds or little solutions you can put in place, but none of them are perfect. I just think that because of the incentive alignment mismatch of royalties, and B, the fact that of a community of 10,000 or 5,000 unique owners, there's always going to be 1,000 of them that will be happily bypassing royalties, and then they'll be able to arbitrage by buying it cheaper and selling it on another market, all sorts of other stuff. So I think we need to get creative and think about different revenue models for businesses, but really ensure this culture of supporting the artists and paying royalties. Yeah, I mean, that was a lot.
Well said.
Yeah.
No, that was very well said. I don't have too much I think you nailed all of the pros and cons and like the relevant salient points here. I would say, even just listening to you talk, I'm refining some of my own thinking. It feels like to me, that 0% creator royalties for most art and most art creators is probably a non-starter. I think this is such a business model innovation for a class of creators who have historically been unable to monetize that without a better alternative like being presented, flat out bypassing creator royalties for digital art creators and this class of creators that just have never been able to monetize before just feels like very icky to me. It just feels like we're going backwards at a time where we really should be more progressive and thinking about how we can unlock more creativity and art on these ledgers. I do think, to your point, that maybe the market hasn't quite found the optimal revenue flow back or royalty scheme that makes sense for most artists and creators. And maybe what will end up happening, let's just call it art, like one-of-one artists or generative artists. What may end up happening is there will just be not a race to zero, but just a more granular way by which creators are able to set these royalty programs that make sense for their work and the life of their work in ways that the market will be sophisticated and understand that when they buy this work, this is the type of royalty program that exists, and this makes sense for this class of work. I think we'll probably get to more sophistication around that and more granularity for artists to be able to set those that royalty program that makes the most sense for them and for the market to understand that. And maybe it looks lower than what we've seen. Maybe it's a degrading royalty structure over multiple years. But I just think there will probably end up being some non-zero sophistication around royalties for creators. I think to your point about PFPs and 10K collections, I think you're right to distinguish these are largely different things. I would argue that, for many of these projects, like let's take Bored Apes, for example, I don't think Bored Apes would be able to be in the position it is today, where it's creating and resourcing these lines of effort across video games and culture and events and apparel and all of the things that they've set out to do, had they not had that business model innovation tacked in from the start. They certainly, the easiest comp is just to look at Larva Labs, who didn't have that royalty flow back. And Yuga, which was a much later project, was able to buy, for all intents and purposes, like the Meebits and the Punks from the largest project in the space, mostly because one had the business model innovation and the other didn't. And if you stretch that out over decades, the hope is that some of the biggest organizations that come out of Web3 or that come out, that are built over the next few decades are going to come out of Web3. And there needs to be some engine by which that happens. And so I definitely take the point that it feels less equitable, or I guess less, I could see why this big corp taking revenue flow back on every sale of an NFT feels a little bit different than an artist who's just trying to feed their family. These are just different things. But at the same time, I'm not quite sure we can unlock innovation if we just completely hamstring these organizations' ability to grow over time. And so without being presented with a viable option by which these organizations can thrive, these Web3 native organizations can thrive, whether we're talking about a PFP project or a membership card project or whatever project that's using NFTs as the base asset, without some alternative, I just think we're going to continue to see stunted innovation across the board. And so I think where my mind goes is, okay, well, maybe we just need more efficiency or something that makes more sense. But I think I bias towards higher royalty fees until that happens, mostly because I want to see Web3 win. I want to see the biggest companies in the world come out of using this technology and using NFTs. And if we hamstring or kneecap the ability for organizations to do that by ripping out their source of revenue, I'm not quite sure we're going to evolve as an industry in the ways that we hope we are.
Yeah, no, that was really well said, and I agree with everything. I remembered what I was going to say before as well, which was a potential idea I've heard for, actually it's been implemented already, where you have these time-based memberships, a year-long membership. Where obviously Proof did it with 3 years. Metaverse HQ's done it, and there's tons of alpha groups now that have done it. Where if you are delivering utility and value, then you pay for a year worth, and then you get to decide at the end, and maybe you can re-up at a much discounted rate and stuff like that. Or you have a base layer NFT and then you can upgrade it or, you know, pay additional. And like in exchange, there's zero royalties. Like it's just like it's not even an option. Like the project says, hey, we're launching with zero royalties, but our utility and our ability to grow is predicated on our community continuing to support us. So interestingly, we're going back to like Web 2 subscription based models, but hopefully with a Web 3
all roads lead to Web 2.
It's
dude.
crazy.
That's sad. I hope that's not the case.
Yeah,
but
I hope we
I can see what you're
else.
seeing.
Yeah. The other thing I was going to say is I really love your point about artists getting creative with their royalty structures, and we've largely just seen the flat version, which is mostly 10% for artists, which makes a lot of sense. But you know, maybe it makes sense that I think I first heard Dmitry Cherniak say this, where it would be great if, you know, you start off with 50% royalties just day one to deter the flippers. And then over time, it goes down to maybe 2% or something like that. Or it could be price weighted as well. Whereas, you know, if something goes to $10 million, maybe it's a 3% royalty instead of a 10%. But maybe if it's $1,000, it's a 25% royalty or something like that. It's a lot of options.
I think to your point, Zeneca, that like the industry will converge around time-based solutions. I mean, I've mentioned this before in other places, but like time, to me, is one of the most underexplored variables that we've like played around with as an industry. We have these ledgers that can track time, like that you can hold an asset for X amount of time or Y amount of time and program in how time affects that asset over the course of its history. And so it feels directionally right when I'm listening to you talk that time weighted or time variable royalties feels like something that the industry may eventually converge on as we think about what equity looks like for both the artist and the collector and the trader over the next few decades.
It is this idea of when you buy an NFT, you're effectively, or you should be in most cases, agreeing to some terms and conditions. And, you know, you're buying property, a digital property, digital asset. And some projects have included in the terms and conditions the requirement to pay royalties. Many haven't, but I think there's also this social contract that, you know, today if you buy a Moonbird, you agree that if you're going to sell it, you're going to pay royalties. It's implied. Maybe it's in the Moonbird T's and C's. I actually haven't checked, but I think we will see more of that go on, and I think that especially artists will try and protect themselves by. And it becomes unfeasible to sort of litigate and go after people, and obviously you can never get around the OTC stuff. But I think it's maybe not as crypto native to have T's and C's baked in where a centralized entity can intervene. But I do think we're going to see more of that as we move more into like a legal, like less out of the Wild West that we're in.
Yeah, I agree. Exciting days ahead, dude.
Yeah, it's fascinating. Well, this has been a true pleasure. I could honestly chat to you for hours and hours and hours, but I really appreciate you taking the time to be here, and we covered a wide variety of topics. Is there anything you want to mention before we wrap up? Anything you want to plug? Or
nope.
Anything? Yeah.
I'll just say you can find me at Derek EDWS. That's DEREK EDWS on Twitter. Zeneca, we're gonna have to get you on the 100 Proof podcast that I do with Kevin at some point. So we'll run it back for round 2.
Amazing.
Otherwise, thank you, and thank your audience for like hosting me. This has been a lot of fun, and I'm excited to get into part 2, part 3 with you here over the next year.
Me too. Amazing. Thank you so much. We'll have links to all of that below. Have a wonderful day. Thank you.
Thank you, sir.